When I talk about the new tech trinity of social, mobile, and cloud, that's that troika of disruptive technologies. It makes up one of my major long-term themes, and get rich carefully. I know that the cloud is the hardest part to understand. Every day you interact with social and mobile technologies, but the cloud, the really revolutionary part of cloud computing, has very little to do with the consumer and a lot more to do with helping companies become more efficient while also saving them money. While it's less visible to regular investors, the gains from cloud computing can be absolutely staggering. So it's worth taking some time to get your head around the concept. Case in point, Concur Technology, CNQR for you home gamers. Concur may not have a super sexy sounding business. Company provides businesses with corporate travel and expense management software through the cloud. But man, does it have a sexy stock. So last night, Concur reported an absolutely stellar quarter, and today it rocketed $18.59, or 17% higher, giving us a fabulous 35% gain since we spoke to the CEO at the Dreamforce conference back in November. How did Concur pull this off? Cloud-based corporate travel and expense management might sound like a real snooze fest to you, but the fact is, this company is revolutionizing the way businesses manage these things. Typically, most companies book travel arrangements through one process. Then employees submit their expense reports through a totally different process, meaning one hand doesn't know what the other hand is doing. Concur software streamlines the whole thing, allowing companies to manage travel booking, itinerary planning, and expense reporting through the same platform, which is super important because this is one of the major areas where businesses can save a bundle by better managing what's really going on. In short, subscribing to Concur's cloud-based software as a service platform is a serious money saver for the company's 20,000 clients. This is a young company. It's no wonder that when Concur reported last night, it thrashed the earnings estimates with a 9-cent beat off of a 12-cent basis, dramatically better than expected revenues that rose 32.8% year over year, terrific 32% billings growth, and strong guidance for the next quarter. Let's check in with Stephen Singh. He's the chairman and CEO of Concur Technologies. Learn more about the quarter and where the company is headed. Mr. Singh, welcome back to Mad Money.
Hey, Jim. Good to talk to you again.
All right, how did you do it? Even when I saw you, I had no idea that your company could shoot the lights out like this. What happened? Just describe to me the last month of the quarter, because it must have been extraordinary.
We certainly had a fantastic month, but the reality is, Jim, that we see great new customer sales every single month, right? Especially in our SMB market segment. We're consistently signing, strong business every single month. There's very little distribution or back-end loaded distribution, especially in the SMB market segment.
Well, let's go with this SMB, because I think I want people to understand this better. One of the things a lot of people liked when you were on with me, and they say, but I still don't really get it. You have what, the Mets and the Pirates?
The Mets and the Pirates. In fact, GoPro joined as a customer. MakerBot, for those of you that are interested in 3D printing, joined as a customer. I think that the real message behind that, though, is that you think about the diversity of customers that are signing on to Concur for managing travel, for managing their expense reports, for managing their trips. And the reality is the 20,000 customers that we have today, while that's fantastic and it's a great position to be in, we added 1,000 just last quarter, right? And so if you compare that to the million-plus customer opportunity in North America and in Europe, we have a long, long ways to go, and I think we've got a tremendous solution set to deliver to those customers.
I know that Goldman Sachs, which is maintained incorrectly, I should add, a sell on your stock almost the whole way, is talking about how they're worried about margin pressure. And I was looking at the margins, and I said to myself, you've got this gigantic government contract, and you're not going to be booking any. It doesn't seem like you can book anything in 2014 for that. But could that be a source of the margin pressure that Goldman's so worried about?
I think we look at it very, very differently. We look at the investments we're making in the business as compared to the total opportunity we're trying to address. If we just focused on what we did today, which is selling travel, itinerary management, expense management, and trip link services into our corporate customers, we have 20,000 plus customers. We just added 1,000. We can go, let's say we get to another couple 100,000 customers, which we certainly will do with time. Just selling those services into customers, that's a multi-tens of billions of dollar revenue opportunity. So we're feeling pretty good about the opportunity. And what we're doing is we're investing against that. At scale, this business has best-in-class gross margin, best-in-class operating margin opportunity.
You say in the conference call, Steve, I'm going to drill down on this. We are always have been, will be a product company. Across the technology landscape, history shows that the greatest product companies often get the chance to become platform companies. Does that mean that at one point I will be able to get everything on Concur that I want, from the restaurant reviews to the hotel bookings to information about travel, so that in one stop I don't need anybody else? I don't need Expedia. I don't need OpenTable. I just need Concur.
Yeah, I think maybe just a slightly different twist, Jim, but I think the premise of what you're saying is exactly right. Look, really great companies, really great product companies, especially in big markets like the corporate travel and expense market, oftentimes start to see an ecosystem building around them. What's important once that happens is to start to invest in delivering a platform that all of our partners can build on top of. And the reason this is important is that it improves the experience for the traveler. It improves the experience for the customer. And frankly, it adds tremendous value for our partners. Let me give you a really simple example that kind of helps put this into context. Let's say you're on a flight and it's running 30 minutes late, which is obviously not necessarily atypical. Let's say you booked a cab using Taxi Magic or a sedan using Uber. Wouldn't it be great if, because that flight's 30 minutes late, TripIt automatically notified the taxi company or automatically notified Uber that your flight's running 30 minutes late and that they should pick you up 30 minutes later? That's what a platform enables, that type of seamless experience where things just happen automatically for you so you can go focus on the things that are important to you, which is frankly growing your business.
Well, I'd kill for that. That is just an unbelievable idea. That is terrific.
That's what we're going to deliver.
Now, you ended up with just remarkable. I was talking with Mark Benioff about the kind of revenue growth. When can you do $1 billion?
You know, I think that if we continue at the rate of growth we're going today, let's say we can continue to hit the mid-20s growth rate, we'll cross $1 billion in 2016. So this is, we couldn't be happier with the progress of our company. We couldn't be happier with the value we're delivering for clients. Now it's just day-to-day, just great execution and continue to deliver that value. In 2016, we'll cross $1 billion, but to be fair, that's just one milestone. We think there's a multi-billion-dollar opportunity just in the corporate travel market.
Well, when I met you out in San Francisco, I said, I want everyone in this stock. It's been right. These two, a couple people have sells. You know what? At 200, they're going to be talking to them and see when they come to the buy list for Concur. Thank you so much, Steve Singh, Concur Technologies Chairman and CEO.
Great to see you again.
Thank you. This stock is not expensive on the out years. That's how I tell you have to invest in growth. The out years. Don't look at 2014. It's too small time. Stay with Concur. Stay with Cramer.